Good morning and welcome to today's webcast, Compliance Overview, Reporting Requirements for Businesses. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the Slide Deck and Handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the Slide Deck and Handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
I am pleased to introduce today's presenters from Moss Adams, Erin Fennimore, Director in our NorCal office, and Jill Dymtrow, Director in our SoCal office. And Jill, I'll turn it over to you to get us started.
Thanks, Emily. All right, thank you guys so much for joining us today. I will go over the agenda. So first, we're going to talk about the Common Reporting Standard. So the theme of today's deck is the different AEOI, Automatic Exchange of Information regimes that have arisen in the last couple of years. And we'll start this with the Common Reporting Standard. And Erin will explain to you the irony of that name, something we might not have appreciated about the OECD in the past. And then I'll talk a bit about the building blocks of CRS. And any of these reporting, withholding regimes, there are certain building blocks that you must get right in order to comply. So we'll go over the details of some of those. Then Erin will cover some of the most common issues that filers run into when you're executing CRS reporting and documentation obligations. Then I'll talk a bit about the Foreign Account Tax Compliance Act, FATCA. And then Erin's going to go over the differences between the CRS and FATCA regimes, and we'll have hopefully a couple of minutes at the end for some questions. So I will now turn it over to Erin to enlighten us about the background of the Common Reporting Standard.
Thanks, Jill. Hi, everyone. So as Jill mentioned, we're going to be starting this webinar with the Common Reporting Standard. And the irony she was referring to is that there is absolutely nothing common about the Common Reporting Standard. And so just taking it back a little bit, CRS, which is the Common Reporting Standard and what I'm going to refer to it as throughout this webinar, was born on the heels of FATCA. So as we all know or will learn, FATCA is born from the IRS and is basically the IRS demanding that the rest of the world provide all of their account holder information. And the world looked at that and said, wait a minute, we want to be benefiting from that exchange of information as well. So the Common Reporting Standard is a global exchange of financial account information so that other countries will know that their residents have accounts, financial accounts in other jurisdictions. And obviously, all of these regulations are to try and combat tax evasion. So while the U.S. has put a lot of regulations and reporting and withholding in place to know if, as U.S. residents, we're trying to offshore our money and be tax evaders, now the world is getting on that train as well. Now, CRS, there is no associated withholding at this time, so it's a little bit different than what we're used to in terms of backup withholding and non-resident alien withholding. There is no withholding. It has two general building blocks. There is the documentation, so the due diligence that you're going to be responsible to carry out to identify your account holders, and also the corresponding reporting. And I know those are really general, but we're going to break those two building blocks down into a series of questions that you can ask yourself, and that's going to help form the processes that you're going to put in place for documentation and for the corresponding reporting. So moving along, the current status, there's currently over 100 jurisdictions so far that are considered participating under CRS. And in a couple slides, I'm going to give you a really easy reference chart so that you can have an easy point of reference to know, all right, am I resident in a participating jurisdiction? Are my account holders resident? So that's going to be the easiest part of our analysis. An interesting fact, the biggest non-participating jurisdiction is the United States. We are currently not participating because the United States' view is that FATCA is our equivalent to CRS. So all of those regulations under the 1471, which is where FATCA is codified, that's the United States' version of CRS. And this can cause a lot of confusion, which we're going to get a little bit more detail into when we talk about CRS Common Issues, because the fact that we're not participating can cause confusion on the part of U.S. account holders at a foreign financial institution as to whether or not they're required to pass through their identifying information. So does CRS apply? I've described what it is, and now you say, great, I know what it is. Do I need to do anything? Does it actually apply to me? So there's going to be 4 general questions that you can ask and include in your analysis to know, A, do you have a responsibility under CRS to document and then B, to potentially report? So the first question is, do you reside in a participating jurisdiction? Now, participating jurisdictions, again, it's countries with an agreement that's in place under CRS. And in about 2 slides, I think, I have an easy list. The other easy thing to do, just reference the OECD website. So that's oecd.org. And if you go to Automatic Exchange List, it's going to show you all the current participating jurisdictions under CRS. It's going to show you those that are, quote, in effect, when they became in effect, so was it 2017, 2018, and those that have signed but do not currently have an exchange date in place. So easy reference. So that question is pretty easy to answer. The second is, am I a financial institution? And we're going to go into that. And then if you are a financial institution, do you have financial accounts and do you have reportable accounts? So if the answer to the first 2 questions, are you in a participating jurisdiction or are you a financial institution, if one of those is no, then CRS does not apply to you. That means that as an entity, you don't have to perform those due diligence and reporting requirements under CRS. So the answer has to be yes to both participating jurisdiction and financial institution for CRS to apply to you and for you to need to modify your current onboarding procedures and potentially reporting procedures. So moving on. Oh, we have our first polling question. So I am going to turn it back to Emily for this question.
Great, thank you. Our first polling question is, what does the CRS stand for? And your options are A, Critical Reporting Standard, B, Continental Realization Standard, or C, Common Reporting Standard. I'll give everyone a few moments to respond. To participate in our polls today, please click the button next to the answer you choose and hit Submit. If you are having any difficulty seeing the polls, you might try refreshing your browser with F5. Give everyone a couple more seconds. And let's go ahead and take a look at the results. Erin, back to you.
Okay, so the CRS stands for Common Reporting Standard. So 85% of you got that right. That probably means that I did not explain it as well as I could have in my first slide. So it is Common Reporting Standard. So moving along. So we're going to now break down those 4 questions that I went to. Again, the 4-question analysis as to does CRS apply to you and what do I need to do? The questions are, 1, are you a tax resident in a participating jurisdiction? 2, are you a financial institution? Do you have financial accounts? And do you actually have reportable persons within that financial account population? So the first question, as I mentioned, is the easiest one to analyze. This is the chart that is constantly updated on the OECD website. And that's, again, oecd.org. And this is showing you all those jurisdictions that are currently considered participating under CRS. So if you are a tax resident or were formed under any of these jurisdictions, then the answer would be yes, you do reside in a participating jurisdiction. If the answer is no, then that's easy. You don't reside in a participating jurisdiction. So turning to our next question, am I a financial institution? The tricky part about CRS is something that I mentioned before. There's nothing common about the Common Reporting Standard because there's 2 sets of regulations that you're going to potentially be looking to analyze and classify yourself under. There's the OECD guidelines, and that's the general guidelines for CRS. However, once OECD enacted those, each local jurisdiction that's technically participating has enacted their own local regulations. And sometimes, a lot of times, those differ. So where those will differ can be in a lot of different categories. It can be in terms of the categories of what the OECD considers a financial institution compared to, for example, what the Cayman Island considers a financial institution. A lot of times those local CRS regulations will be more granular. They'll provide a lot more details as to what they consider a financial institution, what they consider a reportable person, the data elements that are required for reporting. They provide a lot more details. The OECD is a general framework, so it's a good starting place, but you always need to make sure that you're also in compliance with the local regulations. So again, this slide is based off the OECD, and there's 4 general categories of financial institutions. There's depository institutions, custodial, investment entities, and specified insurance companies. The most common clients that we currently work with and the easiest to analyze as to whether or not I'm an FI is a bank, a depository institution, and then a lot of our fund clients. So our venture capital and private equity, they fall into the investment entity category. However, there's clients that don't fall into these general categories, and we have to do, an analysis not only under the OECD, but under the local guidelines as well. An example of that would be a holding company. So we'll have to analyze whether or not that's classified as a financial institution. And sometimes those local regulations spell it out really clearly that it's included. Other times they're silent. So we have to start doing a bit more detailed analysis. So if the answer is yes, I reside in a jurisdiction that's participating, and yes, I fall under one of these 4 general categories, then what that means is that CRS will apply to you. And when I say apply, it means that you are bound to comply with the due diligence requirements and potentially the reporting requirements. So you will have to incorporate into your onboarding procedures, the documentation, which we're going to go through in a bit, and the year-end reporting. Now getting to the reporting, there's one slide I haven't touched on, is that there's a handful of classifications of entities where they are financial institutions. The type of activities they carry out day to day would place them in a financial institution category. But under both the OECD and the local guidelines, these type of institutions are so low risk that we're basically going to exempt them from having to report. And it makes sense just looking at the type of entities these are: government entities, international orgs, central banks, retirement and pension. This low-risk institution under local law, that's going to vary jurisdiction to jurisdiction. So, you just need to take a look into the local regulations. Exempt collective investment vehicles and trustee documented trusts. All of those are considered so low risk of having accounts that are financial tax evaders that they aren't required to report or collect the documentation under CRS. So you've determined that you are a jurisdiction and you are in a jurisdiction and you are a financial institution, so you have to comply with the due diligence. Now you actually have to look at, do I have financial accounts and reportable persons that I would actually have to report? So financial accounts, they're a lot of times going to just mirror the type of financial institution you are. Obviously that can vary, but generally, if you're a depository institution, you have depository accounts. You could have custodial accounts, equity and debt interest in certain investment entities, and then your cash value insurance contracts and annuity contracts. So those are the general categories of financial accounts. And obviously there's more types, and whether or not you're classified under those is something that you would need to analyze using the local regulations. And then a reportable account. Now, so you could be bound to actually having to carry out all those due diligence steps, determining, documenting all of your account holders, but do you actually have anyone to report? That's another part of the analysis under CRS, because as a financial institution, let's just take, for example, that you're a Cayman Islands bank. So obviously you're in a participating jurisdiction, you're a financial institution, but do you actually have anything to report at the end of the year? So throughout the year, you've been documenting all of your account holders, and you see through that documentation, they're all individuals that reside in Peru. Well, Peru is not a participating jurisdiction, so you don't actually have a population that you have to report. But we're going to get into later on, there's actually a nil reporting requirement. So, well, it gets a little bit tricky because you have to go through all these documentation steps throughout the year, but you just may not have anything to report at the end of the year. That doesn't negate the obligation to document all of your account holders. So what is a reportable account? A reportable account is held by a reportable person or by a passive NFV with one or more controlling persons. So under CRS, what is the ultimate goal of CRS? It's looking for reportable persons or individuals that reside in a participating jurisdiction. They're active NFVs, non-financial entities. They're passive NFVs that could have controlling persons that themselves reside in a participating jurisdiction, So it's looking more for individuals and passive entities with controlling individuals under that are all resident in a participating jurisdiction. If you have individuals or passive entities or controlling persons that don't reside in a participating jurisdiction, they're not reportable. So that's why it's so important to get the documentation piece correct, because if you're documenting all of those account holders correctly in terms of how they're classified, meaning individual, passive or active entity or financial entity, and then their actual tax residence, you're going to know your population up front before you even get to the, reporting requirement. So, as I mentioned, a reportable person is a resident in a participating jurisdiction. There are a few exceptions. So if you have any account holders that are publicly traded corporations, government entities, international organizations, or financial institutions, those are all accepted and removed from the reportable population under CRS. And I know this is all probably getting a bit confusing. So I like to use diagrams with a lot of my clients and just process flows. It helps really simplify it. So after you've determined those first two questions, which I went through of a jurisdiction and financial institution, is the account holder a reportable person? So if the answer is yes, you would report that account holder. If it's a passive entity, you would have to drop down to question number 2, where is it a passive non-financial entity with one or more controlling persons that has a reportable person? If the answer is yes, you would then report that controllable person. If you go the no path, well, then you're not reporting any individual account holder, but you may have a nil reporting requirement. To further complicate this already complicated analysis, each jurisdiction has differing rules as to whether or not they require nil reporting. So I'm going to turn it now to Jill to talk about the process and the building blocks of CRS.
Thanks, Erin. It's a great summary. So this makes my job a lot easier. So the obligations that you will have if you do make the determination that CRS applies to you. You're in a participating jurisdiction. You are an FI. Now you have your compliance obligations that will start like any respectable information reporting regime with documentation. So when we move to CRS, this is not a U.S. regime. We're not using the forms that one may commonly associate with reporting and tax documentation, the forms W-9 or W-8. The focus of those forms is, status under U.S. law, if you're certifying your U.S. status, or if you're certifying your foreign status, but then we're going to look for U.S. indicia. CRS is really focused on, all CRS jurisdictions, distinguishing the account holders or account owners as CRS jurisdictional residents or non-CRS jurisdiction residents. So and where we're making this determination, we're also looking for things like indicia of a CRS jurisdiction, even if you've certified your status as being outside of a CRS reportable country. And as Erin mentioned as well, different countries may require different data elements to meet their reporting requirements, but that would be based on your FI jurisdiction. So really important if you do determine that you are a resident of a CRS reporting jurisdiction, the local rules and the handbook that they would issue and the guidance that they would issue is really important for making sure that your self-certification is robust, because a self-certification isn't a form like a W-8 or W-9 that's issued by the government and you have to fill out this format. It really just requires a number of data elements that will allow you to determine whether your account holder or the controlling person underneath your account holder is reportable under CRS. So you're going to get the standard information. Entity, this is the self-certification for an entity that we're looking at on this slide. For an entity, what's the entity's name, what's their address, and we want to know their country of incorporation or organization, and then we're going to look at all of the different tax residences. So, for the most part, entities, you will have one tax residence and an associated taxpayer identification number with that residence, in that, if a local jurisdiction can't find that that tax resident. They're not going to be able to tax them. And then the complication with these entity status or entity certifications is that you have to determine your CRS status and certify to that on this form. So for foreign entities, this might actually be easier than if you have a U.S. entity opening an account offshore, because foreign entities have been dealing with FATCA just a little bit longer than CRS has been around. So CRS statuses, as Erin was referring to before, financial institutions or non-financial entities, whether they're a accepted entity or a passive or active non-financial entity. Those certifications will have to be determined and made on the form, and foreign entities have generally a bit more familiarity with this because of the FATCA certifications that they've been making on Forms W-8 for a handful of years now, since 2014. And U.S. institutions get this and they're like, well, this looks like something that foreign institutions have to certify to. I don't know. I haven't done this analysis. So, really similar to what that is, in that, we're determining if your entity is kind of a risk for others hiding behind you to, create investment income that they're not reporting locally, or if there's something like a government or an active NFE that's, running a business somewhere that really isn't, ripe for tax evasion. So with your entity certification, you'll also need to provide a controlling person's attachment so that you can be aware. You'll do your first level of analysis on the entity and whether the entity itself is reportable. And if the entity itself is not reportable, if it's one of the types of entities that you would be subject to looking through to identify those controlling persons, and perhaps have an obligation to report the controlling person for CRS, even if, regardless of whether or not the entity that holds the account is reportable under CRS. So for CRS, we have this concept of controlling persons. We'll talk about in FATCA how it's a little bit different with U.S. substantial owners. But controlling persons are natural persons who will exercise control over an entity. So you would collect the name and address information here, along with the different tax residence jurisdictions with their corresponding taxpayer ID numbers, so that the jurisdictions can find them to potentially charge them tax. And you'll also collect the other kind of standard data elements that one would expect when, reporting information such as perhaps date of birth, state or city of birth, and country of birth. So all of these would be required if your an account holder entity is a passive NFE or one of the other, any type of, account holder that would be required to pass through information. All right, and then we have another polling question, so I'm going to pass it off to Emily.
All right, thank you. Our second polling question: when is an account reportable under CRS? Your options are A, if the account holder or controlling person is a resident of a participating jurisdiction; B, if a U.S. person earned more than $10,000 in a year; or C, if the account was held in a non-participating jurisdiction. And as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. And we'll give you just a few more seconds here. Let's go ahead and take a look at the results. Jill, back to you.
All right. So yeah, the majority of you have gotten this correct. If you have an account holder or controlling person that is a resident of a participating jurisdiction, that will generally be a reportable account under CRS. The U.S. person one, come on, that's way off. Also, if it's if there's an account in a non-participating jurisdiction, they would not be participating in the CRS reporting. All right, so now we move on to individual self-certifications, and this one's a little bit easier, just as forms, W-8 Ben are far less complicated than W8BEN-E. So you have, name, address, a date of birth, a country of tax residence, a corresponding TIN, a certification, signature, and date. So really it's just, okay, here's my personal information. This should be enough to allow my local jurisdiction to understand who I am and what I'm earning on the CRS reporting. And there's no additional, complicated trying to figure out what kind of status your entity holds as, under CRS. So individual self-cert's much more direct. And again, these are not standardized forms that you must collect, version 5.02.219 issued by the OECD. There's, different organizations, they may issue kind of standardized formats for these forms, but at the end of the day, if you're collecting the required data elements and the certifications, you are good. All right, moving quickly to the second building block of CRS, and this is reporting. So if you're an FI holding active financial accounts in a CRS participating jurisdiction, so those are kind of those three requirements. You're an FI, you're in a participating jurisdiction, and you have active financial accounts. This isn't, vendor payments or anything else. You're going to report individuals that are resident in a CRS participating jurisdiction, entities that are resident in a CRS participating jurisdiction with a CRS reportable status that is, required to be reported, such as a passive NFE, active NFE, startup NFE, active NFE, other. A passive NFE with a controlling person resident in a CRS participating jurisdiction. So that item is connecting with the fact that you're getting that controlling person information as the kind of second page of your entity certification. Also, an investment entity that's resident in a non-CRS jurisdiction with controlling persons that are resident in a CRS participating jurisdiction. Entities also with uncured indicia relating to a CRS participating jurisdiction, and individuals with uncured indicia relating to a CRS participating jurisdiction. So here it is that the presumption rules are if you don't have a valid CRS certification telling where, that you should report and certifying that information, or that you don't have to report and certifying that information, then the jurisdictions will give you rules where if you have an account holder that has, an address in Spain, then, well, if that isn't explained or cured in some way to say, no, I'm not really a Spanish resident, I reside in the UK, you may have to report them also to other jurisdictions where you do have that indicia. So it is possible where you may report a single entity or an individual to more than one jurisdiction. All right, so now components of reporting. It's interesting in that, again, with information sharing regimes, a lot of times the certifications you collect will have the required data elements, for the most part, that you are required to report. So for an account holder or controlling person, what you are going to list on this reporting is the name, the address, the jurisdiction, and the taxpayer ID number. For individuals, you'll also need the date of birth and sometimes the place of birth. And then the account number and the name of the financial institution that's issuing the report. All makes sense. Kind of corresponds with what we see in the U.S. as how information returns get issued to us. And then account information. So here we have different income totals broken down into interest, divs, other incomes, proceeds, and interestingly as well, account balance. So there are times when, through CRS reporting, you may not have any income that was paid to the account, but you're still going to report the balance. And so that's a little bit different from traditional income reporting, but we can blame FATCA for that one, and we'll talk about that in a few more slides. So at this point, I'm going to hand it over to Erin to tell you all about the issues that you may run into when doing your CRS compliance.
Thanks, Jill. So turning now to some common issues that we've run into with our clients. And there's one big, it's a point that I really want to clarify that I didn't put on this slide, and I think why FATCA and CRS, in addition to being completely new reporting regimes, why it's so conceptually different is that, when you think about information reporting, it's all payment driven. You made a payment. There was an act associated that then had corresponding reporting. Where CRS and FATCA is different, it's just active financial accounts. There doesn't have to necessarily be a payment associated, and I think that's kind of a hurdle that people have a hard time conceptualizing and getting over. So I just wanted to point that out, that's a big difference and a big shift, because Jill and I speak a lot about, 1099, 1042S reporting, and it's all payment driven. You just run a payment report. This is just an active account listing. So I just wanted to highlight that. So bringing us back, these are some common issues that we see a lot of clients run into. So controlling persons, as Jill brought up, there's 2 points to this. Who do I list as a controlling person? Who do I report as a controlling person? A lot of times, clients, when they're being asked for that controlling person information, they say, well, what is a controlling person? And the thing is that a lot of the regulations are silent. The OECD guidelines are silent on it. There is, the Financial Action Task Force, which we call the FATF, recommendation. They said a controlling person, first of all, it always should be a natural person. And if you're a trust, if you're, a trust and your trustee is a trustee, a bank, well, a lot of times the bank says, well, there's no one person at the bank that controls that specific trust. So we run into that a lot with some of our investment accounts that are trusts. But generally, it should be a natural person that has a controlling ownership interest. Now, there's no definition, except the Cayman Islands did release a 25% threshold. Generally, everyone conceptualizes that to mean 25% or more. And if no one person owns 25%, which can definitely happen, it should generally be like a senior managing official of that entity. But again, there's no bright line rule as to what a controlling person is in terms of the threshold of ownership. Of control, not ownership. Excuse me. The second is the TIN format validation. With 1099, you put it in the IRS system and it TIN matches for you. That's not how it works. Foreign TINs can be a range of formats. And, the OECD has general guidelines as to each jurisdiction's format of their local taxpayer ID equivalent, but it's definitely not exhaustive. We've run into a number of scenarios where, we learn other taxpayer IDs that are used commonly in the jurisdictions that aren't listed on the OECD. So currently, you don't have to validate because there's no quote unquote validation rules. Best practices are referencing that OECD list of all the jurisdictions and their corresponding TINs or taxpayer ID number equivalents. And if it's not listed, do some research locally, because the consequence of not at least reviewing to make sure, say it says XXXXX, well, that's most likely not reasonable. If you submit that on your XML, if it happens to be associated with a reportable account, the local portal will flag that and kick it back, because a lot of local portals are programmed to recognize the format it would expect to receive based on the jurisdiction. Now, conversely, if it's not programmed correctly, it could reject a TIN that we would consider formatting correctly. So there's two sides of the coin here. But you should always be at least reviewing it against the OECD and the local, any local knowledge that you have of that taxpayer ID to make sure it's not blatantly inaccurate. But there is no way to actually validate it similar to a U.S. taxpayer ID. A reasonable explanation for no TIN. There are more than a handful of jurisdictions that don't issue taxpayer ID numbers. The Cayman Islands is one of them. So what do I do in those cases? just make sure you're collecting a reasonable explanation. A reasonable explanation would be, local jurisdiction or XX jurisdiction does not issue taxpayer ID numbers or equivalent taxpayer ID numbers, not legally required to obtain a taxpayer ID number. Certain entities that have tax-exempt status don't have to obtain a taxpayer ID in certain jurisdictions. Just make sure it's a reasonable explanation. It's not something that says, I didn't feel like it. And then what to do for self-certifications for U.S. persons and also investment entities that are in non-CRS jurisdictions. So that would, kind of fall into that U.S. person classification. So this goes back to my original point of it being a bit difficult when you, as a foreign financial institution, have the obligation to document all account holders, regardless of their individual jurisdiction. That education, that the obligation is on your end as a financial institution, not on their end as a account holder. So it's educating them to let them know, as a financial institution in, let's just take the United Kingdom, for example, we have an obligation under CRS to document all account holders. We understand that the U.S. is not participating, so ultimately, yes, you would not be reportable, but we have to document you to get to that position, document you as a U.S. tax resident to then exclude you from our reportable population. Because if you aren't able to document them, technically they are undocumented and would fall into the reportable population. So it's that education and discussion that needs to occur a lot of times. And you can always reach out to your tax advisor to help with that. In terms of investment entities in non-CRS jurisdictions, there is one complication. So as Jill was mentioning, any passive entity has to disclose its controlling person. Well, if you're an investment entity resident in a non-CRS participating jurisdiction, so let's take, for example, I'm a U.S. trust. I'm a U.S. Financial institution investment entity. Well, since I'm an investment entity in a non-participating jurisdiction, you're actually treated under the regulations as a passive entity, and you have to disclose your controlling person. This is another education that is extremely difficult. There's specific citations right in the regulations as to how these investment entities are actually treated as passive. So kind of an easy fix, as in that there is an actual source of information to let them know why you're asking for the controlling persons, but it can be a bit confusing, but just keep that in mind. And then the next issue we run into a lot is, all right, how do I treat all of my undocumented accounts? In a perfect world, every account holder would give you a self-certification. We're not in a perfect world. It's hard enough just to get IRS Forms W-9, Forms W-8, now you add in the self-cert, it can get really cumbersome and account holders get frustrated. So there's generally 4 options that you can operate under because there are no actual presumption rules in the regulations for undocumented accounts. So option 1, you report to all jurisdictions. Basically, you report to every participating jurisdiction that I have an undocumented account. This is rarely used and an extremely conservative approach. I don't have anyone taking this approach. Option 2 is to report to only indicia jurisdictions. So, for example, you have a UK individual account holder that did not properly fill out their self-cert, or they actually have uncured indicia. So technically they're undocumented. You would report to the UK and say they had, mailing instructions in Spain. You would report them to the UK and to Spain because you have an undocumented account that is a resident in the UK, but they also have indicia in Spain. So that's the second option. A lot of my clients do that. Then the third option is to report to the home jurisdiction as an undocumented account. So with that example I just told you, you would only report them to the UK. Option 4 is combining option 2 and option 3, and that's what I described as to reporting them to the UK and reporting them to Spain. That's the most reasonable approach, and obviously if you can cure that indicia, then they wouldn't technically be undocumented. Now we are going to exit the world of CRS and we are going to enter what is FATCA reporting, and I'm going to turn it back to Jill for that.
Thanks, Erin. All right, so this is kind of like take everything that you just learned about CRS and like flip it inside out, because FATCA is kind of mutually exclusive with CRS. So CRS is everybody else, and FATCA is, well, let's say CRS is trying to allow all of the other jurisdictions of the world, most of the other jurisdictions of the world, to identify their residents for tax reporting purposes, and FATCA is America trying to identify ours. So it works a little bit differently, but it has the same kind of basic requirements. So FATCA, and also financial institution based here. So if you're an FI, you have some FATCA obligations. FATCA is going to require financial institutions to perform specific due diligence and identification procedures to establish the identity of individual U.S. persons, along with the substantial U.S. owners of certain non-financial foreign entities, and the FATCA status of a foreign financial institution or a non-financial foreign entity. So prior to FATCA, any foreign entity completing a foreign W-8 BEN back then, because prior to FATCA we didn't have the BEN-E, were certified as foreign. All right, done. But FATCA is going to look through specific types of foreign entities to identify U.S. owners who are using the foreign entity to avoid U.S. taxation. So why FATCA exists, I like to share the story because it may give you kind of a better background, because we had Chapter 3 reporting for a really long time now. If a U.S. company made a payment to a foreign person, you would report them on a 1042-S, perhaps withhold at 30%, or less depending on what kind of documentation they gave to you. So what's the problem there? Well, the problem there we ran into when I was doing different audits of financial institutions and different kind of tax haven locations is you'd have a W-8 BEN for an investment entity that was set up in the, say, Cayman Islands, and underneath that W-8 BEN, the financial institution had 3 U.S. passports or driver's licenses for the people who are allowed to take the money out of that account. But that Form W-8 was certifying that account as foreign, and they were getting 0% on gross proceeds, and they were getting 0% withholding on interest, and max 30 on dividends. So that wasn't such a bad deal. Now FATCA really will look through those types of entities to identify whether the underlying owners are U.S., and you have CRS to look through those types of entities to identify if those underlying owners live anywhere else in the world. So now trying to figure out how FATCA applies to you in the sense of having documentation, reporting, and potential withholding obligations. Back to the age-old question, are you a financial institution? You would make that determination either under the U.S. regulations or the intergovernmental agreement for a Model 1 or Model 2 country. We'll talk about intergovernmental agreements in a couple of slides. And identifying if you reside in Model 1 or Model 2, IGA jurisdiction is about as easy as determining if you're in a CRS participating jurisdiction. There is a list. And it just means a country with an agreement in place with the United States about how to execute FATCA. So what happens with FATCA is, for foreign financial institutions, during the account opening process, you're going to determine the FATCA status of your account holder and identify whether you have underlying or direct account holder reportable accounts that are obviously, held or owned by U.S. persons. because in most countries around the world, it's illegal to take information about your account holders and send it outside of the country, the IGAs were seen as a necessity. So Model 1 IGA jurisdictions are jurisdictions that have agreed with the IRS, listen, we can't allow our financial institutions to send information about account holders offshore. We're not down with that, but we're going to have them report locally to us, and then we're going to share that information with you because we're allowed to. And then Model 2 IGA agreements really just allow the local financial institutions to report directly to the IRS. So this way the IRS is getting the information in two different ways. And depending on the jurisdiction that the FI is located, and that will kind of legally allow them to participate in FATCA, because the alternative is non-participation in FATCA and a 30% withholding. So kind of talking about the format of the reporting that the IRS is going to receive, Forms 8966 are considered, the FATCA reporting. It's the FATCA report, and it was really developed for U.S. withholding agents, Model 2 IGA FFIs, remember those guys that are reporting directly to the IRS, and participating foreign financial institutions that are not in an IGA jurisdiction. They're going to use the 8966 to report the specified U.S. persons and U.S.-owned entities to the IRS directly. There's an electronic filing requirement. You would use, instead of the FIRE system that we use for 1042S and 1099 reporting, you're using the IGAs system, International Data Exchange Service, that was created specifically for FATCA. The deadline is March 30th. There's an automatic 90-day extension. You just have to send in the 8809I, and then for reporting Model 2 FFIs, there's no extension of time to report non-consenting U.S. accounts or non-consenting, non-participating FFIs. So that information has to be in by the deadline, but all of the other kind of named information can be in within the extended time period. So here's your list of Model 2 IGAs. I think I was, when this kind of first happened, surprised to see things like Switzerland on there, since they'd, for so long been kind of a secrecy jurisdiction. But I think that ship has sailed for them, and they, along with the other countries on this list, will allow direct reporting to the IRS using the IGAs system of the FATCA information. And then if you're an FFI in a Model 1 IGA jurisdiction, you wouldn't use the 8966 because those financial institutions are just reporting to their local governments. And this is kind of similar to CRS reporting, and that many of those governments have set up local portals, and they're going to ask you as a local FI to submit directly into that portal in the formatting that they specifically require. So the IGA reporting data elements are obviously going to mirror the information that is provided on the 8966. But each IGA country for a good part, has set additional rules for data elements or formats in which to report. So some have not gotten creative and just want you to use, basically what the IGAs formatting is, but others have gotten creative in different data elements that they would like to collect. There is a standard schema for IGA reporting. If you're curious, it's in IRS publication 5124. An interesting fact about the 8966 reporting, when we have 1099 reporting or 1042S reporting, you always have an IRS copy and then a recipient statement, and this is not the case. So you don't have to send a recipient statement for 8966 or IGA reporting. IGA FFIs file a FATCA XML schema, so it's just kind of an e-file that they upload directly to their local portals. And then there's some kind of oddballs out there as well, like Singapore, which is a Model 1 IGA, still files directly with the IRS and notifies the IRS once the filing is completed. Similar also to CRS is that nil reporting requirements vary by jurisdiction. And what does nil reporting mean? That means you're an FI in a Model 1 jurisdiction, and you may do all your due diligence and say, yeah, there's no U.S. people here to report, so you have to file a report with to say there's no payments were made to U.S. persons. I don't have any U.S. substantial owners. I don't have any of that stuff, but I still have a requirement to file, so here it is. It's basically confirmation that there is no reporting to be done versus the government wondering, like, did they just not do this? Are they waiting? Are they going to file it late? What's going on? So it's just kind of confirmation that you've done all your due diligence and you had nothing to report. Due dates for this reporting are going to vary by jurisdiction. And local guidance is issued for each of the jurisdictions within their portal so that you need to be aware if there are specific additional data elements to include. And there's usually implementation, guidance notes, and reporting guides issued by local tax authorities. I wish there was a good centralized place to find them all. But CRS, at least the OECD, kind of tries to consolidate some of that information, but everybody, a lot of jurisdictions are still, issuing guidance in different ways each year, and a similar thing can be said for local IGA guidance as well. So here's a list of Model 1 IGA countries. There's a lot of them, and they are, most of the developed jurisdictions that you may expect that are collecting this reporting locally from their FIs and then turning around to transmit that to the IRS. All right, so documenting accounts for FATCA. We use CRS or IRS forms W8 and W9. Self-certifications can be used, but only where you don't have payments of U.S. source income. So if you are opening up accounts offshore and you have payees that are like, there's just not going to be any U.S. source income, you're not offering them U.S. securities, you can potentially create a combined CRS and FATCA self-cert and kill two birds with one stone here and have the combined data elements that you would need in a single self-certification, and then nobody has to fill out a U.S. tax form. In any case, when you collect that documentation, you're going to have to review it for accuracy against your books and records. Easy review is, is the name the same as my account holder? Is the address the same as my account holder? Great. The more difficult review comes where you have KYC information in your books and records that may conflict with the FATCA or CRS certification that they've provided, the status there. All right, so this slide will give you a list of all of the different types of individuals or entities that are required to be reported for FATCA, whether it be an owner-documented FFI with an interest holder that's a specified U.S. person, direct accounts held by specified U.S. persons, or even undocumented presumed U.S. reportable accounts. Now, if you get a Form W8 IMY from a passive NFFE or a certified deemed compliant FFI that's a QI or an NQI that's provided withholding statements that are disclosing these specified U.S. persons, or a territory financial institution that's disclosing these specified U.S. persons, you will likely have a reporting obligation for those disclosed. And what kind of data elements are we going to see here? We've got that static filer information, name, address, taxpayer ID, whether they have a GIN, which is the FATCA ID number, and then direct account holder information, same name, address, taxpayer ID, FATCA class. And then we're going to also do that, account number, interest, dividends, gross proceeds, redemptions, and also, just like CRS, the account balance. So again, not necessarily an income-driven reporting requirement. If you've got an active account, you may have a FATCA reporting obligation. All right, turning it over to Emily because I know we need to fit this polling question in.
All right, thank you. Our third polling question, what is reportable under FATCA? A, sales of goods in excess of $600. B, investment accounts held by EU nationals. Or C, account balances of U.S. persons holding accounts overseas. And for those of you that would like a copy of today's slide deck, you can download them now from the folder that says Slide Deck and Handouts to the right of the slide view. We will also be sending the slides via email after the webcast. And I'll give everyone a few more seconds. We do have one more polling question coming up. If you hang tight, if you still need that for your CPE. And let's go ahead and take a look at the results. Back to you.
Thanks, Emily. All right, so yes, the majority of you have gotten it correct again. Account balances of U.S. persons holding accounts overseas. And then I will move on to give Erin a 30-second window to explain the difference between FATCA and CRS and our last polling question.
Thanks, Jill. We're actually going to jump to our last polling question just for CPE purposes, and we will answer that and then get right back to CRS versus FATCA for a 20-second overview. Emily, back to you.
All right, thank you. Final polling question. Is the United States a participating jurisdiction under CRS? And your options are yes or no. And once you have completed all CPE requirements, you will be able to download a PDF of your CPE certificate from the certification widget to the right of the slide view. And I just also wanted to mention, I know we are right at the top of the hour. If you have questions for our presenters, you can still enter those in the Q&A window, and we will answer them as soon as we can after the webcast. And let's go ahead and take a look at the results. Erin, back to you.
All right, so the United States is not a participating jurisdiction under CRS. They consider FATCA their equivalent of CRS. Just quickly going back to highlight, so CRS versus FATCA, the biggest difference is that FATCA is looking for those U.S. persons, those U.S. account holders. It's citizen, not tax-based. It's one-to-one. You're just reporting to the IRS. CRS is like opening Pandora's box. It's looking for residents in any single participating jurisdiction, which there's over 100 of them. It is tax residency based, and it's one-to-many, meaning you can have one account holder in Switzerland, but they'd be reporting him throughout the world. So it's very much different. Again, this is just a different, in a different format, so good reference point. And then nil reporting, as I mentioned. Good news, you don't have any account holders that are reportable. Bad news, you probably have to submit a nil reporting XML requirement, and it varies jurisdiction by jurisdiction. Cayman Islands does require nil for both FATCA and CRS, so keep that in mind. And then with this last few seconds, just are you prepared? You know, Cayman Islands did extend the reporting, so it went from May to the end of July, so that's great for a lot of our clients. It allows them to review their active accounts. Do they have self-certs? Do they have tax forms? Have you determined who's reportable? Have you compiled all that information that you know you'll need to, report upstream? And have you registered for the local reporting portals? Cayman Islands, the portal registration was April 30th. So hopefully everyone that had new FIs did register. And then, as Emily said, please send any questions. We will be reviewing those. Even though we don't have time, we will definitely, Jill and I will definitely make sure to answer those and get those back to you. And we are here for any questions that you may have. Sorry we ran out of time and had to rush through, but I will let everyone go to lunch now.
All right. We are at the top of the hour. If you have questions or if you asked a question and we didn't have a chance to respond, as I mentioned, we will do our best to follow up with you after the webcast. And thank you, Erin and Jill, for a fantastic presentation today. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts widget to the right of the slide view. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE progress window. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy will be emailed within 2 weeks should you have any difficulty downloading it now. Here is a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey as your feedback is very important to us. Thank you for joining us, and we hope you'll join us again next time.